Yeah, so if you both could just give like a brief introduction of yourselves and then we can kind of get into the fireside chat.
Yeah, great. I'll quickly start. And then Doug, you can give the probably longer, more interesting introduction about Livepeer. So Northzone is a venture capital fund. I'm a partner here in New York. We've been investing in, I really want to say kind of Web3 more specifically, but crypto broadly since 2015. We led Livepeer's, I guess, seed round a few years back and have been very excited about working with the company in the ecosystem and watching some of the earliest developments kind of from then until now, and seeing a lot of the seeds planted by Livepeer and the team and the ecosystem really grow into standards that have now really pervaded the rest of Web3.
Cool, thanks Wendy, and thanks Alex and everyone for having us today. Yeah, I'm Doug Petkanics. My background is originally as a software engineer with a computer science background, but I've spent most of my career kind of as an early stage tech entrepreneur. This is the third company that I've worked on. Built one that was a video or a local data infrastructure company that was successfully acquired by Groupon back in 2012, and then worked on one company that really didn't work out at all. So I've had that experience as well, and been working on Livepeer with my co-founder Eric for about 5 years now, with the mission to build the world's open video infrastructure. And I'm happy to get into all of this, but really what had changed in the world and what enabled us to take this on was the rise of blockchain technology, and particularly the rise of Ethereum, which was a kind of open development platform. And for the first time, we saw an opportunity to align incentives for open source software, people to run that software and form infrastructure networks, and people to be able to participate in the economic upside as those networks got used and grew. And we saw that was really powerful. It was something new and could be really disruptive. So we've been working on that for a few years now.
Great. And Alex, is there like a format you wanted us to use for this, or should we just kind of have a chat?
Yeah, we could just like have a chat. People feel free to kind of chime in, ask questions in the chat, or like unmute yourself. But yeah, I don't know if you have like a kind of a list of questions.
Yeah. So, why don't
Wendy, before we dive in, I'm just curious for kind of those in the class here, just people's level of familiarity. I don't know if people want to chime in on the chat room, or Alex, if you want to give an overview, but I'm curious if people are familiar with Bitcoin, if they're familiar with blockchain, if they're familiar with Web3 and decentralization as concepts, if people have actually built and worked on any projects before.
Yeah, so we honestly have like a mixture of everything, because we have Columbia students, I think other students, and also just some people in crypto in general. But I'd say that people are definitely familiar with blockchain, kind of like the concept of decentralization. Not everybody might be familiar with what what Web3 is, how it's kind of different. And then yeah, in terms of Livepeer, probably like some people are a little bit familiar, but I assume like not extremely familiar. So yeah, it might be good to either like define those concepts, or just like maybe I'd say like define them as you're using them. I think that'd be helpful.
Yeah.
Thanks. Yeah, sounds good.
Thank you for that clarification. I propose that, let's probably, it would be helpful to maybe set the context a little bit about Livepeer, and Doug, maybe you should do that. And then I propose let's make this as casual as possible. If people have questions on some of these terms, either send them in the chat or just unmute yourselves and ask us, because we're pretty open. And Doug and I have these chats every once in a while where we get carried away on the future of crypto and blockchain and lingo changes. So maybe, we'll have one of those in context of all of this framing and Livepeer's role in the ecosystem. How does that sound? Cool. I mean,
sounds good to me.
Yeah, sounds great for me.
I'd be really curious, Doug, to hear your definition of Web3, because that seems to be a new kind of lingo that's floating around. I assume people have heard Bitcoin before, probably ETH, and maybe now especially NFTs, but a while back DeFi. help us frame kind of the conversation around Web3 and what Livepeer has been doing in context of all of these other kind of waves that have happened in crypto and blockchain.
Sure thing. All right. So to understand Web3, it might be helpful to go back to Web 1 and Web 2. Yeah, these are big, broad marketing terms that mean different things to different people. But if you think of the first, wave of the internet, it was really about publishing and access to information, right? You had things that could emerge, like websites that would just be on any given topic and kind of online encyclopedias, and you could kind of access the world's information at your fingertips, and that was amazing, right? And then Web 2 emerged kind of with the advent of dynamic web applications that were interactive. It kind of introduced interactivity for the first time. As a result, you could build things like social networks, like Facebook and Twitter, that emerged, that were really connected the world in these interconnected networks. You saw the rise of mobile, kind of putting the internet in everyone's hands and apps. And the kind of the business models that were associated with Web 2 led to a tremendous amount of centralization and winner takes all dynamics. The business models were to create these free apps and services that aggregated everyone's attention for free, essentially. And then you could build up these huge networks of people, and you could kind of monetize their time and their attention through advertising and through harvesting their data and using it for your advertising engine, or even selling their data directly. And this is a trade that a lot of people accepted for a while. Oh, I can use Facebook for free and spend 15 hours a day on there. But we're actually starting to feel some of the negative effects of those models on our society, where the types of news that are being surfaced to people, the types of content that makes its way into people's feed, is all dictated by what propels this model and how attention is attracted. How can these platforms extract as much data as possible to be able to monetize your time? And obviously, society's felt a lot of pains around these sorts of things, in big high stakes situations like the recent elections as an example. And so Web3 is actually kind of what people believe is the swinging back of power away from these kind of centralized monopolistic big tech platforms, and decentralizing that power out kind of back the way the original internet was intended, but with a lot of positive effects. So decentralizing the infrastructure tools, so not every single application is running on Amazon Web Services and Google Cloud because they're the only scaled platforms. Decentralizing the data ownership, so users can actually own and retain and be in control of the data they're sharing, as opposed to the big tech platforms like Facebook controlling all of your data. And decentralizing the ownership of these networks. So instead of Uber, Airbnb being the only company that benefits from using those platforms, all of the property owners or drivers or participants in those networks would actually have ownership and would benefit from the economic upside that's created. And more importantly, their incentives would be aligned to make sure those are good, healthy platforms that benefit the users and the service providers, as opposed to just the big company that's trying to extract platform or power. So a lot of abstract concepts in there, and I'll stop talking on that now, but Wendy, that's kind of my view of that.
It's very interesting for you to hear again, we've talked about this before, but you explaining it from kind of the bottoms up perspective and how it impacts society in real ways. Since I'm not a technical person, the way, that we've been talking about the story kind of internally, it's a lot more kind of abstract than that. But I think, if you think about the economy sort of moving online, it's dependent on trust, essentially. And Web 1, there were companies that built a lot of trust in themselves. So you had this one-to-many relationship where now you can trust AOL deliver you news that's going to be trustworthy, and therefore you will pay for it. And then Web 2 was all about creating these platforms where people could trust each other, and then therefore they could exchange sort of financially. But still, you had to trust the platform. You wouldn't find an Uber driver if you didn't trust Uber, and therefore Uber took a bunch of the value out of that, out of that era. And then same goes with Airbnb, same goes with Google. You trusted that they could sort of facilitate these types of peer-to-peer exchanges, to Doug's point. And then for us, Web3 is about building the trust into the fabric of the internet itself, so that people could trust each other without these intermediaries, that as such, they extract the value themselves from these economic exchanges. And it's the most sort of least rent seeking way of kind of going about this. And that's sort of, to frame it at a non-technical level, I feel like it's a definition that's helped me a lot. And then when it comes to video specifically, Doug, can you talk to us a little bit about how the ecosystem for video looks now? Because I guess not a lot of folks really, get too kind of deep into the tech stack there, and then how Livepeer helps to eliminate the need to trust these platforms kind of from a live video streaming perspective.
Yeah, sure thing. So, as background again, Livepeer is a video infrastructure. So our users are developers that build sites that look like Twitch or look like YouTube or TikTok, right? We have people that build DJ streaming platforms and artist streaming platforms and sports streaming platforms. And typically, if you were to create one of these streaming applications, you would need a video infrastructure to power all the video streaming under the hood. It's very technically complex to capture and process and distribute video all around the world in real time to give people a good streaming experience. And if you happen to be going after a use case that allows many people to stream at once, kind of like a Twitch would, you really need a scalable infrastructure that can handle these incoming streams and be available to do it. And because it's so compute heavy, that requires a lot of servers, and it requires data centers and a lot of bandwidth. And really the only kind of infrastructure options out there to do this in the way that a startup would be accustomed to building are to rely on the big public cloud infrastructures: Amazon Web Services, Google Cloud Platform, Microsoft Azure. There's very few other sources where you can spin up servers on demand and have them available to handle your streaming infrastructure. But those platforms are very, very expensive. They're marked up tremendously over the cost of a server. And because very few people can actually do this for live streaming, there's a little bit of this kind of monopoly effect where they're charging $3 per hour per stream for processing, which is really prohibitive for a startup if they're letting hundreds or thousands of users stream at once. And so you see these really high prices. You see streaming platforms can only build on Amazon and Google, but who are these streaming platforms competing with? They're competing with Twitch and YouTube, the two big streaming platforms that operate that Web 2 model of letting users use it for free, but then monetizing your time and attention and data. And by the way, who are YouTube and Twitch owned by? They're owned by Amazon and Google, the same exact providers that you have to buy infrastructure from. So anyone who's trying to create a better experience for people through video is competing with Amazon and Google, but they have to pay Amazon and Google to run the infrastructure. And that's a really unsustainable position to be in as a startup, and it's very challenging and cost prohibitive. So at Livepeer, we really oh, yeah, go ahead, Wendy.
Sorry, I just wanted to ask, one of the things around kind of this infrastructure being expensive, specifically around live video, is that, isn't it right that it's hard to fully kind of predict how many people are going to show up, essentially? And in that way, kind of Web3 and the way that it's set up around distributed infrastructure, one of the things I've always loved the most about how Livepeer does it is that you're able to actually do it at a perfectly elastic bandwidth. But can you talk a little bit about how you're able to do that, but still charge very little compared to the incumbents?
Right. Yep. So Wendy's point is, if you have 1,000 people streaming at your peak, but most of the time you only have 400 or 500 people streaming, you actually need to have enough capacity standing by to serve that 1,000 people. Otherwise, once those people show up, they won't be able to stream and your app can't grow. But if you're only at 400 to 500 users, most of the time you're kind of wasting all of that spend by paying for servers to be online that aren't there. So, and that's in like the traditional Web 2 world if you're using Amazon. So Livepeer, we just have this network of people contributing their compute power to be available to encode and process video. And when you want to use it, you can just pay for exactly what you're using. You can assume there's always going to be enough capacity. You don't need to pre-provision or pay for that 1,000 streams in advance to be standing by. You can just show up and assume infinite scale. So how do we do that at Livepeer? There's kind of two key mechanics here. The first is, and by the way, thanks for bearing with me. It's like the 1 hour of the day when like the sun is like shining on my face in a weird way. So I'm like moving around, I'm avoiding it. The first kind of interesting realization is that there's a tremendous amount of latent video compute capacity out there in the world. There's hardware cards called GPUs. You may have heard of them and used in gaming or training AI. There might be one in your desktop or your laptop. And they happen to be used for a lot of different purposes, but they happen to be used for cryptocurrency mining Ethereum and Zcash and other tokens. And these miners have them in data centers, and there's millions of them around the world. And these GPUs have certain cores on them that can hash crypto, and those are spinning 100% of the time mining and earning money, and they're in a working business model. But they also happen to have video encoding chips on them that can hash crypto. All they can do is encode and decode video, and they sit there doing absolutely nothing in these millions of cards around the world. So what Livepeer does is it gives all of these operators software that lets them keep mining and earning the revenue that's already working for them in a business model, but also earn additional revenue by encoding and decoding people's videos at whatever price they want to charge. So this is just additional revenue for them that comes at no opportunity cost and actually very little cost to process. And again, this is only possible because of the trust that blockchain technology and kind of Web3 enables. Mm-hmm. You can send your video to any random, GPU out there in the world and have the trust and ability to believe that they will do this video encoding correctly, and they will not insert frames of pornography inside of a stream of your kid's birthday party, for example. And how that's done is through some cryptography. It's done through some technical analysis. It's done through some economic security in a blockchain protocol. But blockchain is really the thing that enabled this and is powerful. And so we tapped into it and tapped into this resource of millions of available, video computers out there that otherwise couldn't be harnessed. And so, these operators are willing to do it for a few cents per hour per video stream, whereas I mentioned the cloud providers are charging $3 per hour per video stream, and that's highly cost disruptive.
Yep. For you economics nerds out there, the way I like to think about it the most is that is able to command monopoly type of scale because everyone's running on the same infrastructure. So you can hook into everything very easily at commodity prices. So it's like kind of the best of both worlds in terms of a marketplace, economic marketplace setup. But maybe we should stop and see if anybody has any questions so far.
Yeah, actually, I have a question. So, how do you go about actually building trust amongst consumers for them to, or like somebody building something to actually use the protocol? Especially for people who might be like less technical and not necessarily understand the cryptography behind why like it's safe and somebody can't just insert, like the person processing the videos can't just insert something random.
Right. So there's like a technical answer and a business answer, right? The technical answer is there's a lot of research in this two-phase verification method that lets people very quickly in a live video have high confidence that the encoded segment they're inserting is matches the input video. But then there's a slower kind of second phase of economic security, whereas the people doing the work do kind of have this security deposit that they've put down in order to be able to do the work. You could think of it like a surety bond in construction, where to build a apartment building, you have to put down this huge bond such that if you don't finish the job, it gets taken away. Similarly, if it's shown that someone kind of cheated on the network, they lose a tremendous amount of stake, and therefore, a technical consumer of this would recognize, oh, as long as I'm okay getting, $500,000 if someone messed with my video, I'm willing to take that level of economic security and risk with my stream for my use case, right? So that's kind of the technical and economic answer. On the business side, we've actually created a company, Livepeer Inc., that creates a SaaS product that wraps all of this up. And a lot of the users just kind of have this contractual relationship with Livepeer Inc. that we will do the job correctly. And they don't know about blockchain or decentralization or crypto or anything. They just get the benefit of cost-effective live streaming infrastructure with a nice API. And we manage all that complexity on the back end and use this network as kind of our superpower to deliver this service.
Yeah, that makes a lot of sense. And I mean, if I could ask a follow-up question, how do you actually balance like engineering efforts and just focus on the company between the core protocol and the actual kind of company?
Yeah, that's evolved through the different phases of the project, right? In phase one, it was all about the protocol, the engineering, delivering the prototype and the crypto economics to bootstrap the supply side. When I say bootstrap the supply side, this is actually kind of the second way that we attract this marketplace outside of just that GPU miner opportunity. It's with well-designed kind of incentives through the way that the token, the Livepeer token that coordinates this network was distributed, you can get these supply side operators to show up and put their capacity on the network in order to earn Livepeer token prior to there being a lot of demand. And you can think of it as like mining Bitcoin in the early days before there was a lot of transactions, right? Because you were trying to earn the initial Bitcoin. We could talk about why people want the Livepeer token and what its role in the network is later. But so in that early days, almost all the work was on the protocol, the engineering, the open source software and whatnot. And then once we achieved that bootstrapped supply side of the network, we said, okay, now we can enter phase two. Now we can go to the demand side and convince users to come and use this network because if the supply side's there, it can serve it and deliver on the value prop. And that's actually when we began working really closely with Wendy and Northzone to say, hey, in order to do this, we actually have to build a company, we have to build a product, and we have to go to market and have commercial team and do sales and marketing. And it's a huge opportunity to create, the next enormous video company. Now there's a balance where that's been, I'd say, a little bit more of the focus the last, year and a half or 2 years. But largely it's somewhere in that 50-50 range where both sides, supply side, demand side are both going to be, equally important.
Interesting.
Yeah, and it has enormous implications as well on sort of the business models going forward in the Web3, which I think is an interesting topic to potentially talk about, because on the one side you have these SaaS companies that can, sell kind of nice product, and you're incentive aligned enough in the way, unlike the past monopolies in the world, that you're both kind of, getting paid for kind of good work done on the protocol, but also the company itself can benefit from that. And then on the other side, you have this free and public and sort of open protocol that directly coordinates this like market transaction between supplier of transcoding capacity and buyer of transcoding capacity. Perhaps it's worth, talking a little bit more theoretically there, Doug, about how you think about, the role of companies going forward in the Web3 space, and how do they serve people in sort of a way that's equitable, but also not extract as much sort of profit, or sort of not profit per se, but value out of the kind of the most idealist sense of how Web3 works, but doing it in a incentive aligned way. This is one we haven't really gotten to talk about yet theoretically, so I'm excited to hear your answer there.
The grand experiment, right? What's the relationship between companies and DAOs and protocols?
Yeah.
I do have to, very similar to the last question, I have to kind of align it around what phase you're at with the adoption of this network, this protocol, this project. So first of all, if there's a company that is building or kind of primarily contributing to an open protocol, you really want to make sure the incentives are aligned between those participating in the open protocol and the company itself. So I think it's really important that the company is actually, similarly incentivized in terms of if it's a token coordinated network, you want the company to have a bunch of token, and part of their business model to be that they kind of are succeeding and growing and sustaining themselves if the token value increases through adoption of the network, just like it would be for the actors on the network. So that first step is key. You've like aligned the motivation. Going back to kind of the phase that you're at, I think the company, when they have that alignment, can really play a key role. They can, form a group of people that work together really closely. They can align on a roadmap. They can use all the sound, management practices in order to execute really efficiently. And they can play a key role in accelerating the adoption of the network. That's the role that we play. So our goal as a company is actually to grow the adoption of the Livepeer network. But here's where things get kind of cool and interesting is the things that you do as a company to accelerate the adoption can capture value on their own and maybe better products and services because they capture value on their own, and it allows you to serve your customers well and reinvest in the services they need. I think a great example here that we've talked about is Coinbase and Bitcoin, right? Like Bitcoin is the open protocol. Coinbase as a company is very Bitcoin aligned. They hold a lot of Bitcoin. Their founders hold a lot of Bitcoin, right? But the products and services that they offer, some of them are better because they capture some value and can serve customers well as a result, right? And some of them are better as like low margin things that just accelerate the adoption of Bitcoin, right? So whether that's something like their custody service that they've created is something that's super valuable to users. It lets a lot of parties and institutional parties hold Bitcoin and be part of the Bitcoin ecosystem. That's great for Bitcoin. It helps the Bitcoin price go up. But it's a service that the kind of customers are looking to pay Coinbase to provide so that Coinbase can put all the security measures in place to safely custody their Bitcoin. And it's, it's a value capture opportunity, but it's also good and aligned for the Bitcoin ecosystem as a whole. And so at Livepeer, we think about things similarly in kind of the video services world. And then going forward to what happens in the future, what happens when there's incredible competition on all these products, and there's a million video companies all built on the Livepeer protocol, and they're all driving down the price of streaming for every video application around the world, and that's a competitively unsustainable position for Livepeer Inc., the company, to be in. I would argue what we've seen is that is a long time horizon. You can see that coming, and you can make strategic decisions along the way to better serve the companies that are building on Livepeer and create the products and services they need to adopt it. But also at that point, because you have those aligned incentives, you could say that you've succeeded. Mission is accomplished. The token value and alignment within the company will be so large that it's a far greater value capture than any one company would have individually.
You would have to, we would beat Amazon first, and then we can figure that one out.
Right, exactly.
I see a question here in the audience. Huanan.
Oh, hi, nice to meet you. I really like your lecture talk about the real estate problems. Because I work in the real estate as an HVAC engineer. You talk about the bond, the finance, about how the project going on. So I really understand how this thing going and why it's so important. Yeah, so basically I checked your website, the decentralized of the video. I kind of interested in it because my personally also like a music produce and something. But my question is, for example, you guys also open for like the mining option, use the GPU. Is that free for on the node, or what is the protocol? How much money if I need to prepare to to get in node in this platform? That's my question.
Yeah, good question. So I think just to kind of reiterate, make sure I understand the question clearly, it's if you were to run a Livepeer node and put a GPU on the network to encode video, how much money could you expect to make? Right, is that the gist of the question?
Yeah, not the
Yeah.
money. How much money I need to prepare to buy the node? Because for example, I played the game, the Tom Star, that game, the NFT game, but they sells one verified node like the 10 Ether or something like that, or 100 Ether, something like that. It's very expensive to own a node, or even Dogecoin, some blockchain. So I just
Yep.
question about it.
Yep. So anyone with a GPU can join our network and register in this role to be able to encode video. I would say it's almost free. It's not. You still have to currently be in the top 100 amount of stake as a node operator to be activated. I think that's pretty cost effective. It's a couple $100 worth of stake right now. Actually, I don't know if you guys know about Ethereum and kind of the fees to use the network being really high right now. That does add some cost in terms of taking the actions to register your node. What that would do is you'd kind of be in this open marketplace to compete for work. And you would get test streams every day that would kind of measure your performance. And if you're performing really well, which does take good bandwidth and these good GPU hardware that's online 24/7, you would kind of move up this performance leaderboard. Others would put more stake on you to add security on your node and route work towards you, and then you would begin winning the work that's coming through the network. I think last week or a couple of weeks ago there was like 3.5 million minutes of video. There's about $25,000 worth of fees that were paid and split out amongst these 100 node operators, kind of in proportion to how much work they did. And you've seen some success stories where people joined the network with a couple GPUs, and in the first week they made a couple $100 to pay off the GPU that they had bought a while ago. Right. And then you see some other people who join and maybe don't have such a great connection and get frustrated, and it's been a couple months and they haven't earned a payout yet. The little side story, the payouts kind of come in chunks and they're a little random. They're probabilistic based on how much work you did. So you might not get paid for a while, and then you get a big payment that kind of represents all the work that you did. And it's really all about the performance and how well you're doing with this video encoding task, which has to do with your location, your bandwidth, and your hardware.
And just to add on to that, I think Livepeer is in a pretty unique position, right, to have actual significant revenues be flowing through the protocol already compared to any other sort of non-DeFi protocol. So there's real traction there.
Yeah, there's a cool thing we built. Maybe I can quickly just share a screen tab here. One second. It's called Web3 Index, and what it does is it looks at protocols like Livepeer that provide infrastructure services for developers, and it tracks their actual real usage. So you see Arweave as a storage network, Livepeer is video streaming, Filecoin is also file storage, Akash is kind of Docker containers and servers, the Graph is indexing, data services like database, Helium is bandwidth. And you can actually click in and see kind of their generated revenue for fees that people are paying across these services over time. And we really are starting to see a lot of growth here. We're starting to see these numbers tick up, and we think it'll be a big trend in the crypto space kind of in the coming year. A lot of these have been in development for years and years, and we kind of just reached a tipping point where now they're all available for developers to begin using, and we're seeing early great applications be built.
And let's take a step, zoom out a little bit. I'm not sure how many of you came into crypto with the kind of which wave of it essentially drew kind of your attention the most, but there was a lot of talk back in 2017 about ICOs. I remember at Columbia, and then there was also a lot of talk about DeFi, and now it's NFTs again, Web3. Can we talk a little bit about kind of the mission that you guys have had, Doug, since the beginning, and how you designed sort of the protocol with long-term sort of community in mind, and some of these things that you saw back then, complete blank canvases, right? It must have been very hard to make those decisions on how much to airdrop, who to airdrop to, if you should airdrop at all, or just do a giant ICO and sell a bunch of your tokens and billions of capital in return. But can you talk about how sort of you made those decisions from the very, very early days until now into having one of the most useful Web3 protocols that actually tracks real value to token pricing, which also is an industry first, by the way. How have you kind of navigated this really like amorphous space?
Yeah, it goes back to that recognition of what changed and blockchain enabling this worldwide global network of people to all participate in an open marketplace, to trust one another. And because they can all own that marketplace through the token, they all want it to succeed. And therefore they can all help it succeed in different ways, whether that's running hardware, writing open source software, building video applications on top of it, marketing, right? Any token holder has that incentive, right? And so from the beginning, we said it's really important to have open access for everyone to be able to participate and hold this token. And it's important to have a kind of wide distribution so that many people can get their hands on this in a way that people feel is fair and aligned and creates the right incentives. And so back in, we started in 2016, back in 2017, this ICO thing started to emerge, and the tail end of that year, there was ICO mania, where every project was raising millions of dollars through crowd sales. And certainly that could be like interesting and effective way to like capitalize, a centralized team to build a project. And we've seen lots of great innovations from some good projects using those models. But we also felt we always wanted to like deliver real value before like selling anything to anyone. We didn't necessarily think, your average retail person should be like taking an investment risk on this huge vision before, actually building and delivering something useful of value. And we thought there was other great ways to distribute token and kind of build a community with all those things in mind. And of course, regulatory risk is always a concern and something you have to keep in mind, and you don't want to be conducting an illegal security sale that puts you in trouble before you've even started, right? And so what we did is, as a core team and founding group, we kept a kind of relatively small amount of the network's initial token relative to what you see many projects do. We created this new algorithm called a Merkle mine that kind of distributed a little bit of token to all Ethereum holders so that they all could have access to participate in Livepeer at some point in the future. Think of that as like marketing plus access for everyone. And then this mining algorithm let anyone who like actively participated and believed in the vision to help facilitate this initial token distribution kind of through submitting mining transactions. And that attracted, thousands of crypto enthusiasts to learn about the network, to actively participate and to help start bootstrapping it. So you kind of got your core team incentivized, but still believing in decentralization and not retaining too much power. You have your kind of passive big distribution that gives everyone access later and makes them aware of Livepeer. And then you have kind of the core of it distributed to those 1,000 people that are really going to be your initial army and actually begin to do work. And that was kind of the initial Genesis token. But then we also created this mechanic whereby a lot of token would be distributed over the next 4 years on an ongoing basis to those who are actively helping the network by running this infrastructure or staking their tokens. And what that looked like is just a high inflation schedule. Just every day, new Livepeer tokens were given out only to those who were running infrastructure on the network and staking on the network. And that amount of tokens would go up or down depending on how much participation there was. And that was really effective because it attracted a little bit of a kind of speculative fervor and a race to compete and do helpful work to earn these tokens for the first few years, and was really helpful in bootstrapping the network and getting token in the hands of those who could help the network.
And keeping them in the hands of people that can help the network going forward.
Yeah.
Are there any other questions? I can't remember if we have 45 minutes or if it was the full hour, Alex.
Yeah, 45, but also feel free to go over if you want, or if you have more questions. The next talk's at 12, so.
We'll leave maybe 4 minutes if there's any other questions. Otherwise, I always have lots of questions for Doug.
Yeah, anybody feel free to unmute or just drop a question in the chat and we can read it.
I have a question for Wendy.
Okay.
So Wendy, you've been a supporter of Livepeer since the early days. You've been an investor in this space, and it's taken a long time for some of these visions to play out and for Web3 to actually emerge and be usable. How has your conviction in this future grown or shrunk or changed over the years, and what what are you seeing right now that gives you the most hope and optimism?
Yeah, I'll answer the second one first because that's very easy. What gives me the most hope is continuously seeing amazing talent like you guys, enter in this space from outside of the space initially, and generally meeting with a terrible user experience on the building side, but slowly getting better, and at least being motivated enough by the future upside that we see in creating this web together, but also the ideals behind what everyone is building. And that has really maintained itself through the ups and downs of crypto prices, through the hype waves of ICOs and DeFi and NFTs and God knows what else in the future. But that kind of consistent thread keeps me motivated and excited, because every time I talk to a founder who's building in this space for the first time, their eyes light up and they introduce all of these ideas, and it makes me, very, very excited. And then, our thesis in this space, though, because of that, has been fairly consistent. It's pretty simple. It's like, what will the next web do that's better and more, incentivizing for people to participate that is, better than the current web? I think it wasn't very obvious until Web 2 was fully built in which ways it was better than Web 1. People didn't go into the Web 2 paradigm being like, we're going to build Web 2 now, and like, here's what it's going to look like, and here's all the infrastructure. People just built use cases that were useful, and then users flocked to them because it was a much better experience. And I think in ways that Web3 will be much better, I think we're starting to see some threads of it, right? Like community ownership, community participation, broader stakeholder engagement, things that, really Web2 is trying to get to. Think about what's going on with like proxy voting, people trying to get activist investors like participating in the governance of public corporations, governments trying to make them more, less monopolistic. These are things that are sort of happening at a macro level that the roots of like Web3 are kind of all about. And then the other thing is sort of, just making it easier for people to build things, like what you guys are doing, like what some of our other portfolios are doing. You can, build an app in a fraction of the risk that you used to take to do this, but also attract, many, many more users who could potentially bring their own data, like mind-blowing. And you can use a plethora of algorithms. It's not just about blockchain, it's all of the other stuff that's happening too, to make the experience much more personalized. So there's just so much kind of these threads that we're seeing in ways that Web3 is infinitely better than Web2 using Web3 tech that keeps us excited about investing in this. But of course, no one has a full opinion of what it's going to look like, but it's following these threads and talent like you guys that sort of, makes my job exciting.
All right, glad we can keep it interesting for you.
I mean, it's truly like there's a lot of distractions too, right? Like the ICO era, and every 2 years you kind of hear VCs going full head into like things like that, and it's harder, I think, for us to sort through the noise when you guys are just so committed to kind of building that. They're probably less distracting for you. But on the investing side, when you're thinking about returns for your LPs in the long run, there are some debates people have to have around what is the best way to yield that.
Yeah, yeah. Well, the counter to being really focused is that there's so much is happening in this industry, and we're so excited about all these additional things that are enabled through each innovation. But we have to stay focused, and we don't always get to be part of or participate in the latest, hottest new thing, which is fine. But there's a little bit of me that's jealous that you get to always like dig in and spend time thinking about and figuring out all of them as they come.
Good. Cool. I think this is a fun discussion for us, and let us know via email or Twitter or however you want to contact us if you have any more questions on this stuff and others. But thank you so much, Alex and Columbia Blockchain, for having us today and entertaining this chat.
Yeah, thanks so much. It's super interesting. It's also great that you kind of like stayed away from using just a lot of like kind of buzzwords or like industry terms. I feel like crypto becomes sort of insular when a lot of people are not that familiar, kind of have no idea what anybody's saying. So I think it was definitely very accessible and something that we'll keep promoting just amongst like club members and other students.
Some see it as a pride of a gate to keep out the normies. I think we're past that point.
Yeah.
Yeah, thanks, Alex. Thanks, everyone. And yeah, Livepeer is completely open project and community. So if anyone's interested in checking it out, check out livepeer.org and join our Discord chat. And would love to have you as part of the community to start learning about it.
Thanks, everyone.
Great. All right. Bye.
And then yeah, we're gonna have a talk from Hart Lamber at 12. So he's the co-founder of UMA, basically talking about kind of history of DeFi until today, and essentially what are the things that have to happen for DeFi to become kind of a major player in the financial ecosystem. So I definitely stay around for that.